Welcome back to BitcoinDorks, your daily source for the latest updates and insights on cryptocurrency markets. Today, we're diving into the world of Dogecoin, exploring the intriguing question, can whale accumulation offset Doge's price decline? Dogecoin, often hailed as the fun and friendly cryptocurrency, has captured the attention of investors and enthusiasts worldwide with its vibrant community and meme-inspired branding. However, in recent times, Dogecoin has faced some challenges, with its price experiencing fluctuations and declines. But amidst these fluctuations, there's an interesting phenomenon at play: whale accumulation. Whales, or large holders of Dogecoin, have been accumulating significant amounts of Doge tokens. This accumulation by whales raises an intriguing question: could it potentially offset Dogecoin's price decline? To answer this question, let's delve deeper into the dynamics of whale accumulation and its potential impact on Dogecoin's price trajectory. Whales, with their substantial holdings of Dogecoin, have the power to influence the market through their buying and selling activities. When whales accumulate large amounts of Doge tokens, it can signal confidence in the cryptocurrency and its long-term prospects. Moreover, whale accumulation can lead to a reduction in circulating supply, as these large holders remove Doge tokens from the market. With fewer tokens available for trading, the supply-demand dynamics could shift in favor of higher prices, potentially offsetting any downward pressure on Dogecoin's price. The phenomenon of whale accumulation can have far-reaching implications beyond simply influencing the price of Dogecoin. One notable consequence is the creation of a sense of scarcity and FOMO, fear of missing out, among retail investors. As news of whale accumulation spreads throughout the cryptocurrency community, it can ignite a sense of urgency among retail investors who fear being left behind as the price of Dogecoin surges. The allure of potential future price appreciation, driven by whale accumulation, can be a powerful motivator for retail investors seeking to capitalize on the momentum. The prospect of joining the ranks of early adopters and securing a stake in a rapidly appreciating asset can be incredibly enticing, especially in the hyperbolic world of cryptocurrency markets. This influx of new investors, drawn by the allure of potential profits, could further amplify the demand for Dogecoin, thereby exerting upward pressure on its price. As more retail investors pile into the market, fueled by FOMO and the promise of quick gains, the buying pressure intensifies, creating a self-reinforcing cycle of demand and price appreciation. The psychological impact of whale accumulation should not be underestimated. Whales, with their significant holdings and market influence, serve as symbols of confidence and legitimacy within the cryptocurrency community. When whales accumulate large amounts of Dogecoin, it sends a signal to the broader market that they believe in the long-term potential of the cryptocurrency. This vote of confidence from whales can instill a sense of trust and credibility in Dogecoin among retail investors, further fueling the FOMO-driven buying frenzy. As more investors witness whales accumulating large quantities of Dogecoin, it reaffirms their belief in the cryptocurrency's viability and prospects for future growth. The presence of whales in the market can provide a sense of stability and reassurance during periods of volatility and uncertainty. Whales, with their deep pockets and long-term perspective, are often seen as stabilizing forces within the market, capable of weathering short-term fluctuations and steering the trajectory of Dogecoin towards long-term success. Moreover, the concentration of wealth among a select few large holders, commonly referred to as whales, within the Dogecoin ecosystem can have profound implications for the overall stability and decentralization of the cryptocurrency. When a small group of whales amasses a substantial portion of the total supply of Dogecoin, it creates an inherent imbalance in the distribution of wealth within the network. This concentration of wealth not only skews the distribution of economic power but also introduces the potential for market manipulation and centralization concerns. If a handful of whales hold a disproportionate amount of Dogecoin, they wield significant influence over the market dynamics and price movements of the cryptocurrency. For instance, whales may have the ability to orchestrate coordinated buying or selling activities to artificially inflate or deflate the price of Dogecoin for their own gain. Such manipulative tactics can disrupt the natural supply-demand dynamics of the market, leading to increased volatility and uncertainty for retail investors. Decentralization is a core tenet of blockchain technology, ensuring that no single entity or group has undue control or influence over the network. However, when a handful of whales hold a disproportionate amount of Dogecoin, it compromises the decentralized nature of the cryptocurrency. Centralization concerns arise when a small group of whales effectively dictates the direction and trajectory of Dogecoin, potentially at the expense of the broader community's interests. This concentration of power not only undermines the principles of decentralization but also introduces systemic risks to the security and integrity of the network. the presence of whales with significant holdings of Dogecoin can deter new participants from entering the market, fearing the disproportionate influence of these large holders. This lack of participation from retail investors can further exacerbate centralization concerns, as the network becomes increasingly reliant on the actions and decisions of a select few whales. In conclusion, the phenomenon of whale accumulation in the Dogecoin ecosystem is a double-edged sword. While it may initially appear to bolster the price of Dogecoin and attract investor interest, it also introduces significant risks to the stability and decentralization of the cryptocurrency. Whale accumulation can indeed create short-term price surges and generate excitement among investors, especially those hoping to capitalize on the momentum. However, the concentration of wealth among a few large holders poses inherent risks to the overall health and resilience of the Dogecoin network. That wraps up today's discussion on Dogecoin and whale accumulation. Thanks for watching and stay tuned for more updates from BitcoinDorks.